Each time a recession hits, it takes us by surprise, no matter if you've been through one or not. On average, since about 1900, the US has experienced a recession every 4 years. Did you know that? Now, because of this, it's important to know what to expect and also, more importantly, how to handle your investments during this time period. Hi, I'm Dr. Jeff Anzalone, a Louisiana periodontist, and I created this channel for high income professionals that want to reach financial independence using real estate as their vehicle. Now, if you're new to this whole idea of replacing your active income with passive income, you don't have a clue where to start, simply click the link below this video and I've put together a free passive income guide for you to get started just for you. Okay, let's get started by taking a look at exactly what happens to real estate during a recession. And the first question we need to address is how much is the real estate market as a whole affected? And more importantly, when is the right time that you should pull the trigger and invest in real estate? Now, to find out these answers, we're going to need to look at what's happened during other times of recession, which is going to help you identify where the market currently is in the cycle. Now, this can help you look forward to the next few months and also help you look forward to the next few years. And then you'll have a better understanding and know when is the right time to buy again. But before we get too deep into this, let's figure out and let's address what exactly is recession. Now, as a periodontist, our training taught us that the word recession means the gum pulling away from the tooth, as you'll see in this picture. But for today's purposes, we're not going to get into dentistry. Now, when the economy shrinks for 6 months or 2 quarters out of the year, this negative growth is called a recession. It also occurs when the GDP, or the gross domestic product, which, if you don't know what that is, that actually represents the total value of goods and services sold within a country. Well, whenever the GDP goes down for at least 6 months consecutively, that also is telltale sign of recession. Now, when this GDP returns to pre-recession levels, that marks the end of a recession. Does that make sense? Now, a couple of red flags. Whenever you see these two things, something should go on in your head like, red flag, probably going to be a recession coming. And that's two things. Number one, if you see a continued rise in unemployment rates. And the second thing is if you start seeing erratic up and down stock market fluctuations. Sound familiar? Now, experts often look towards history and highlight traits of the Great Recession that we had back in 2008. And then they go back into the 20s and 30s and they look at the Great Depression that we experienced in the US. Now, by examining and understanding recessions and the sequence of events that occur before, during, and after a recession, you'll be able to learn and create life changing wealth during the recovery period after recession. So, speaking of life changing wealth, let's move on to what we can buy during a recession. And what I've done, I've actually put together 6 stages that we can look at that's going to help you out. And based on previous recessions, I'd like to discuss with you what could happen to real estate during the next recession that we have, plus the recovery cycle. Now, you want to make sure that you track the current US economy in comparison to the different stages that we're getting ready to discuss. And by doing that, you'll be prepared when the right time for you to invest. So stage number one, as we talked about with the red flags, is a rise or increase in unemployment rates. And businesses begin to feel the effects of fewer goods and services being exchanged. Remember this gross domestic product? And when they start feeling this, then they may shut their doors down or choose to furlough or lay off employees. Now, during the recession in 2008, there was 2.6 million people unemployed, and back in the 20 back in 2020 when the pandemic hit, that was a record high. Around 30 million people were unemployed. All right, which gets us to move on to what happens next when you have these shutdowns is number two, government stimulus in the form of checks. So again, as we've seen in recent history, again back in 2008 and 2020, the government may step in with the stimulus in an attempt to what? Boost the economy with cash. And sometimes these programs are offered to keep businesses afloat, and sometimes eligible households, they're sent currency, and sometimes both businesses and eligible households. And again, these stimulus checks, they're really nothing more, as you know, than just a temporary band aid that's going to get cash into the hands of Americans to encourage spending. This is why the first couple of months of a recession that you still see people still being able to pay their rents, well, at least they're supposed to, right? But what happens when people are still unemployed and they've spent all their government money, which leads us to stage three, and that is loan defaults. The longer businesses continue to stay closed and consumer spending decreases, the more likely we're going to start seeing loan defaults in stage three. So, as tenants are unable to pay their rent, real estate owners are sometimes having to put their money in, which causes them to deplete their reserves. And what happens is this results in a wave of defaults for both residential and commercial real estate loans. So as these defaults start to occur, what happens is banks come in and they start to take over these properties, which leads us to stage four, and that is bank real estate owned properties, or REO properties, start to increase. Now, again, when these loans defaults and when these loan defaults occur, what happens is banks then come in and the properties foreclosed on, and then you have this wave of these REO properties that appear on the market. So again, it's just a cycle: default, foreclosure, REO properties increase. Now, as you can probably imagine, the banks and the government, they don't want to get into the landlord or real estate business. And when banks start acquiring a lot of these properties, they start to get a little skittish and anxious to get rid of these properties, and they want to get rid of them at a discount. So it's at this point that real estate investors should be looking really at stage four and be ready with their checkbooks, because stage five is the time that they need to pull the trigger. Now, examining the real estate pricing cycle of the past, we saw peak market prices in 2019. So when will these bank REO properties begin to hit the market? Well, this depends on several factors, including the speed at which the real estate market reacts, typically which is slow. So you want to make sure that you examine the historic trends. And when you do this, you want to look at charts. You want to notice when you have the bottom of the recession happens versus when these REO properties become available. And there could be years between these two events, which means the key to this is going to be what? And Warren Buffett talks about this all the time. Make sure that you have patience. Okay, again, it could be a couple of years before this happens. Patience, wait, study your chart, be around people that know what they're doing. And then, which leads us to stage six, the final stage, and that's inflation. So again, a rise in inflation is really in the recession cycle. It's the inevitable final stage, and it's actually the result of additional money being flooded into the economy. Remember stage two? What happens when you do this? You flood the economy. It comes in and actually devalues the dollar. And this is the entire reason why the same dollar that's in your pocket right now, it's going to be able to purchase much less 10 years from now than it is today, which makes real estate a great investment. Because think about it, most real estate investments, they have a fixed loan. Most of them allow you to lock in payments up to 30 years, which allows you to hedge a bet against inflation. All right, so you have here's your money right here, and the value of it is going down, right? But what's happening to your mortgage payments? So you've got your little house right here, and you got your mortgage payments. Well, for 30 years, your mortgage payments are staying the same, right? But what happens to the value of your property? Value of your property increases or appreciates, all while your dollar is decreased. The value of your dollar decreases, which again, it's a great reason to get into real estate, because the inflation is eating away and at your debt. So if let's say your payment is $1,000 a month right now, well, in 30 years from now, or 29 and a half years from now, it's going to be the same payment, right? It's a fixed amount. But again, your money today is going to purchase or be able to purchase much less. So the $1,000 payment today may only be worth $700 or $600 in 30 years. So again, that also make you reconsider, should you rush off and pay off your properties, whether you have just a primary home, or if you're going to get into real estate. Should you rush off now that knowing all this? Should you rush and throw all of this money and pay this off quick or not? That's up to you. It just depends on your risk tolerance. All right. So now that we've gone through these 6 stages, what should you do now? Now, investing in market cycles and our own experiences that we have with all of this is going to come along, and it's going to have guaranteed uncertainty, right? But however, by examining history and the economic fundamentals, by doing this and educating ourselves, we can have a better idea when each of these 6 stages we just discussed will occur. Just look at the history, then look at what we're going through now, and then you'll be able to tell. Because typically these follow the same pattern each time during a recession. Now, on the tail end of a recession, during the recovery, it's likely that you're going to see tons of deals flood the market. And you want to be ensure, again, that you're ready to buy. You've got cash on the sideline ready to deploy. Now, if you want to learn more about investing in real estate without working any longer or harder, simply hit the subscribe button and stay up to date. And I'll see you in the next video.